Hi, and welcome back to the channel. My name's Nate Lind. I'm the online business broker, and I'm here to teach you how to calculate your seller's discretionary earnings. This is super important because this is the number that you use to add your multiple to. So if it's $1 million and you've got a 4 times multiple, you're worth $4 million. If you've got a 4 times multiple and you're at $500,000, you're worth $2 million. So understanding what the basic number is, your total earnings, your profit, is a critical part to figuring out your business valuation. And it's not as simple as you might think. So that's probably why you're here, trying to figure out how the hell to calculate this thing. So I've got a little bit of a presentation to show you, and then in the sequence of videos following this, I'm going to take you through some examples of some real-life clients of mine who I've looked at their financials, and I've scrubbed any confidential information off of it, but I'm going to show you how I go through and calculate their SDE. So when I tell them what their multiple is, they know what the heck their business is worth. Okay, we're going to jump right into it. What's my SDE, you might be asking yourself? Well, we're going to calculate your seller discretionary earnings. Your seller's discretionary income, your net income, is all of your net income plus any expenses that are considered add backs. And we'll get into add backs here in a second. I've actually got a whole video about add backs. If you click on the link below or the card up in the corner, it'll take you to the add back video. There's a lot of details that we get into in that, my buddy Isaac and I, and we'll cover that over there. But for this, we're going to keep it short. The SDE is your business's core profitability. That's how much money you're making. This is how we calculate your SDE. It starts at the top, your top line number, your gross sales. We're going to net out, we're going to subtract your chargebacks, your refunds, your rebates, any other sales adjustments that happen to your sales number. We're going to subtract or minus your cost of goods sold. We're going to minus your SG&A, all of your selling, your advertising, your marketing, your general and administrative expenses. We're going to minus out, or we're going to subtract all of your non-operating income. So this is any kind of non-typical income you might have gotten. During the pandemic, a lot of businesses got PPP loans, and they counted that as income. A lot of businesses got EIDL loans, other income that came into their business. That's not part of a regular course of business. If it's not sales to your consumers or to your clients, we're not going to add that in. A buyer's not going to give you a multiple of a loan amount you got for a one-time gift. Thank you, Uncle Sam, for that. Another example is settlements that come from lawsuits or other things like that. We're going to pull that out. We're going to add back in any expenses that are considered add backs. Again, we've got a whole video covering add backs. Click on the link below or up in the corner, the card. It'll take you to the add back video. These are expenses that the new owner likely isn't going to have to spend in order to keep running the business on an ongoing basis. This could be like your personal travel. This could also be your meals and entertainment. Maybe you're using your business and the credit card everywhere you go. You're talking about business, so you're deducting a meal from it. So these are some things that buyers may not use, and we can add that back in. Now, if you're likely going to sell to an SBA buyer or a buyer who's going to use the SBA 7A program, them and some other bank options for the buyers are not going to go through all of your expenses. They're not going to go through all of your receipts. They're not going to make sure that each and every one of those for a couple $1,000 here and there are legitimate, personal expenses. They're not going to audit all that. So sometimes they won't allow it. So we've got a little bit of a case-by-case scenario going on here with buyers, but generally we get travel expenses, meals and entertainment, personal automobile expenses, stuff like that, personal cell phone, added back in. And again, you can go to the link below for the add back video where Isaac and I talk about a lot of add backs and what are generally accepted and what generally are not accepted. The next part, we're going to add back in any depreciation and any interest or amortization expenses you have. These are likely expenses that a buyer is not going to have. Boom, we can add those right back in. These are typically allowed by bank financiers on the buy side. So this is an easy one to get back. We're also going to add back one-time upgrades that will not take place in the future. If you do a complete retrofit of your website, of the like maybe some business infrastructure or something like that, that's a one-time situation that the buyer's not going to have to do in the future. We can usually add these back. if you've got some one-time expenses. Sometimes we've had, for e-commerce entrepreneurs, they might have had like a bump in freight costs and shipping costs in 2021 after the pandemic. A lot of things were going wonky in China. That freight went up like crazy. Have successfulully closed deals where we've added back the difference, the delta in the freight costs. So if there's one-time changes or issues with fulfillment, manufacturing, if you're on the business to consumer, the B2C side of things, we can add some of those back. On the B2B side of things, if you've got some one-time upgrades like a call center or some other staffing, potentially you're headhunting or you paid a recruiter for staffing somebody, sometimes those we can get put back in there. And that's it. That's how we calculate the seller's discretionary earnings. Stick around. I'm going to go through a couple of examples in the subsequent videos. If you've gotten any benefit from this, if you've gotten to this far, please give me a thumbs up. Click on subscribe on the channel. Hit the bell so you get notifications about more of these videos that come out. I promise you, I'm not going to drown you in videos. These are time consuming. They take a lot of effort. I'm busy doing deals. I want to do this sort of content to help people like yourself just get to the point where you can understand like how these deals are working, what your valuation is, what your multiple is, what your seller discretionary earnings are. You might be looking at this, maybe I've referred this to you because you're a potential client of mine, and I'm trying to walk you or maybe one of your staff members, CPA, bookkeeper, how to go through this and think how a buyer is going to look at this, because that's what we have to do. We have to get into the buyer's mind. We have to look from their perspective, look from their eyes, walk in their shoes about what it is that they're going to say is a valuable income for the business, what the earnings and profitability is for the business. And that's where we're going to go through some more examples like this. So thank you very much for watching. I'll see you on the next video.